Ladies and gentlemen, welcome to the Central Asia-Caucasus Institute's Forum. Today we have the pleasure of welcoming once again senior representatives from the International Monetary Fund, with whom we have had the privilege for many years of having twice a year a discussion of or presentation of the IMF's view of the situation, the analysis, I should say, not just a view, of the analysis of the economic situation in Central Asia and the Caucasus. And for a long time, we have also benefited from the possibility of having a focus on a particular country during these presentations. So today we will be hearing the IMF's analysis of the general situation in the region, and we will also have a particular view of the situation in Kazakhstan. The event this time around is particularly important, I think, because it is taking place in the, well, not quite the aftermath, but in the tail end, hopefully, of the COVID-19 pandemic. And that's why the subtitle of our event is Arising from the Pandemic, Building Forward Better. And our speakers will talk about the post-COVID economic prospects across the region, the difficulties, but also the opportunities that arise from this, and the economic policies that regional states are putting in place or should put in place in order to both save livelihoods and lives and support the recovery while ensuring macroeconomic resilience, as well as accelerating in the future progress toward more inclusive and sustainable economies. Now we have ideal speakers, I dare to say, for this event. The first speaker will be Dr. Subir Lall, who is a Deputy Director of the Middle East and Central Asia Department of the International Monetary Fund. He's got a long career at the fund. He was the Assistant Director in the European Department. He was a Mission Chief for Portugal. And prior to his current position, he has been Mission Chief for Germany, Indonesia, Korea, Malaysia, and the Netherlands. He also has a PhD in economics from Brown University. Following his presentation, we will hear from Nicolas Blanchet, who is the Division Chief for Central Asia and Mission Chief for Kazakhstan at the Middle East and Central Asia Department of the IMF. Mr. Blanchet has been the IMF Mission Chief for Morocco and Deputy Division Chief in the Monetary and Capital Markets. Mr. Blanchet has started his career before the IMF in the Société Générale, in charge of emerging market country risk analysis, and he obtained a diplôme d'ingénieur in 1987. With that, I'd like to invite you, Dr. Lall, to start and provide us with your analysis. Thank you.
Oh, thank you, Dr. Cornell, for your introduction. And it's really a pleasure to be back here again. As you mentioned, we have a long-standing cooperation with the Central Asian Caucasus Institute, and it's an important part of our engagement with the region as a whole. Thanks also to Dr. Sertelli and Matt Maldonado for the invitation and for helping us along the way to today's presentation and discussion. The launch of the Regional Economic Outlook is the context, as Dr. Cornell just mentioned, and it's an important opportunity for us to engage with the region. And also with others who follow the region. And so being here today and every more or less 6 months is very important for us to have a conversation, to listen, and to also get questions. And I do encourage those who are tuning in to also take a look at the underlying report, which is available on the IMF's website, the Regional Economic Outlook for the Middle East and Central Asia Department that came out in April. So let me proceed now to the presentation. I'll be very brief and then pass on to my colleague, Nicolas Blanchet, who will then discuss in depth one particular case, which is Kazakhstan. So the context of the report, of course, the Regional Economic Outlook is a half-yearly report that discusses developments, prospects, and policy issues for different regions. And so our focus here, of course, today is on the Caucasus in Central Asia. And indeed, the underlying context this time, as last time, is the global pandemic, COVID-19. And it is unfortunately still with us, but hopefully the worst is behind us. So that sets the context for the outlook that we have for the region and also the risks and some of the policy recommendations. So what you see here in the chart is that going over this in terms of just starting with vaccinations, which is key to overcoming the pandemic and getting back to something like normal hopefully in the near future. The leftmost chart shows the vaccination coverage and in fact prospective vaccination coverage in the short run. And as you can see, except for Kazakhstan, most other countries in the region have relatively low vaccination coverage for the moment and at very early stages of having started with the coverage. And when we look at the region as a whole, one can think, and in fact, when we look across the whole of the Middle East and Central Asia region, there are three groups of countries. There are the early inoculators, and for our region that we're discussing here today, Kazakhstan is in that group, where the vaccinations began late last year. And then otherwise, there are slow inoculators who are starting with limited coverage and are not expected to inoculate a significant portion of the population until the middle of next year. And then the late inoculators, who will only start in the late 2021 or the second half of this year. And so they're not likely to achieve broad coverage of vaccinations until even 2023. And in fact, most of the Caucasus and Central Asia countries fall into the late inoculation category. But what you can see from the chart on the right-hand side is that early access to vaccines is expected to support near-term growth. And in fact, we have revised up the growth projections for 2021 relative to the last time we did this exercise in October. And this is partly influenced by the speed with which vaccinations take place. So in contrast to that, the slow and late inoculators, in fact, have seen their prospects for 2021 revised down compared to what we had in October. Moving on to the next set of illustrations, what you can see on the leftmost chart is that fiscal support was also critical in many cases in terms of determining the shape of the trajectory, the trajectory, I should say, of the recovery. Countries that were able to deploy above average fiscal support in 2020 are expected to have a faster recovery, and that's the yellow dashed line on the left. And countries that have provided below average support will not see a return to pre-pandemic GDP levels until next year. And so fiscal support has been quite important. If you look at the middle chart, several countries in the region, of course, are also highly dependent on tourism, which, as we know, is a highly contact-intensive sector. And so the outlook for this group of countries will continue to be influenced by restrictions on domestic and international travel, which, as you know, are very much still in place. Hesitancy also about inbound tourism, and as well as mandated and also voluntary social distancing measures, given concerns about infections. So our growth projections for countries that rely heavily on tourism revenues, for example, Armenia, Azerbaijan, Georgia, they were revised down quite significantly relative to the October Regional Economic Outlook publication, because tourism looks like it's going to take some time to recover, and it took obviously a very big hit last year. And if you look at, on the positive side, the rightmost chart shows the remittances have been quite important. And several countries, of course, are highly dependent, as you know, on remittances in the region, mainly from Russia. And this includes Armenia, Georgia, the Kyrgyz Republic, Tajikistan, and Uzbekistan. While there was a sharp drop in remittances in the first half of 2020, quite spectacular, it actually turned around very quickly in the third quarter and ended the year stronger than was expected initially, especially in the oil importing countries. And so remittances have in fact played a stabilizing role in this shock. And perhaps because greater hardship in recipient countries has increased the demand for remittances, and so their family members and others were able to provide them that support from elsewhere. And so remittances can, in fact, play the role of a lifeline for the poorest segments of the population. Moving to the next chart and looking at the outlook. Now, clearly, there remains, I should say, an exceptional uncertainty around the outlook. And that's because, of course, the path of the pandemic and of the vaccine rollouts is still not precisely pinned down. And so what's often characterized as the race between vaccine rollouts and new infections, that's what will determine whether the region as a whole will have a faster or a more protracted recovery in the near term. If vaccine production is expanded and distribution accelerated, it could indeed accelerate the recovery. But if the vaccine production is and distribution is slow, and if there are new infections or new variants, then the recovery could be slower as well. In addition, there are a few other risks to the outlook, and that of course includes tighter global financial conditions and possibly a premature withdrawal of policy support. And of course, one of the downsides of that can be that an unequal recovery could lead to an increase in poverty and widening of inequality in a number of countries. And so we need to be mindful of that as well. The charts 2 and 3 on this slide that you see illustrate the risk from tighter external funding conditions, which are becoming increasingly of relevance, I would say, but not a big risk right now. We've seen the recent increases in the US long-term bond yields, which is the red line, and they've led to renewed capital outflows from the region, the blue line. And so that's something that can be of concern if it persists or exacerbates for vulnerable emerging market countries, including countries where external debt is elevated or has increased significantly in recent years, as you can see from the right-hand side chart. However, several of these countries have had higher external debt because of higher official borrowing and not relying on markets, so that reduces the risk of capital outflows. And many countries in the region, in the Caucasus and Central Asia, also have substantial reserve buffers that can guard against capital outflows. Moving on to the next chart, and this is the baseline outlook. From the left side, you can see that projections for 2021, 2022 vary across the region, and that's split between the region as a whole and between oil exporters, that's OE, and oil importers, OI. But on average, the outlook for 2021 is below that of emerging market and developing economies as a whole. That's the dashed line you can see. And real GDP we project for the region is expected to pick up to 3.7% this year, which is about 0.2 percentage points lower from what we had in October last year. And oil exporters should be able to grow at about the same pace as projected last year. While activity in Azerbaijan will be affected by oil production cuts under the OPEC Plus agreements, Kazakhstan could, on the other hand, increase oil production. Uzbekistan should benefit from a rebound in mining, transportation, and hospitality sectors. For the oil importers, though, there have been significant downgrades, including because of the pandemic second wave that we saw late last year and a weak tourism sector that I mentioned a few minutes ago. And that would slow growth for some of these countries, and that reflects the downgrades in growth for the oil importing countries, and hence for the average for the region. In chart 2, what you can see is also that the pandemic will likely have a lasting impact on the region. And this shows what the GDP losses would be relative to what we had projected before the pandemic in the year 2024. And so that what is called a scarring might be of relevance and probably close to the average for the emerging market and developing economies as a whole globally. But it doesn't show the variation across countries. And it's of course expected to be heavier for countries that have relied heavily on tourism. But sometimes country-specific factors can also play a role. So the final point to make, perhaps at this stage, and this will wrap up my part of the presentation, is that it is important. There are two main policy priorities. One is to address the immediate near-term impact of the pandemic and the recovery from the pandemic. And so policymakers need to be nimble and use the tools they have available to address the crisis as it unfolds. And if they have fiscal space, for example, to continue to use that. If they don't have fiscal space, then to reprioritize spending to support health, public health, and to support incomes as much as possible, but also to prepare for a resumption of reforms that are needed over the medium term. And that would help alleviate some of the scarring that is currently being projected. And what that would mean is to have more diversified private sector-led growth over the medium term. The role of the state has expanded quite a bit during the pandemic, and appropriately so in many cases, but then eventually most of the job creation will happen from greater investment from the private sector, because the state simply, in most cases, does not have the room to be able to do that, and also for more efficient allocation of resources. So those are the two priorities. The near term is addressing the pandemic and its consequences, and then over the medium term is getting back to a path of recovery and resilience and private sector-led growth. So Dr. Cornell, let me stop here now and then back to you. And of course, we'll come back to some questions, I suppose, at the end of after Nicola's presentation. Thank you.
Thank you very much, Dr. Lall. This was most useful as an introduction. I already have some questions, but I'll wait with them until later. Mr. Blanchet, the screen is yours, so to speak.
Okay, thank you very much, Svante. It's great to be here, and thanks a lot for the opportunity to present our view on Kazakhstan in particular. So I'll try to put my short presentation in the context of what Subir laid out for the region. So if I had to sort of summarize the key points I want to try and make today, Kazakhstan is an oil exporter country. It was hit by a double shock. It was hit by the pandemic, but it was also hit by a shock on oil prices early in the crisis last year. Now, the oil factor has two aspects. One is that Kazakhstan was exposed to that shock, but at the same time, it also helped Kazakhstan build buffers, what we call buffers, which is capacity to take shocks, to absorb shocks, because they accumulated a lot of resources in the National Oil Fund, which, as we will see, has helped Kazakhstan to absorb the shock. And so the main point I will try to make is that, you know, it has helped to secure macro stability during the crisis, and that's an opportunity for Kazakhstan to continue to strengthen the policy frameworks that it has in place, but also to continue the reforms that Subir was mentioning, because Kazakhstan, like other countries in the region, are still economies in transition. So there is a big structural reform agenda that needs to be pursued. So let me start with the fighting the pandemic in Kazakhstan. The first thing I would say is that Kazakhstan has implemented strong containment measures for more than a year now. They were very early in responding, and their response was decisive in terms of closing borders, restricting mass gatherings, and putting large cities under quarantine. And you can see that on the left-hand side chart, the black line here. In addition to that, Kazakhstan had put in place a very solid vaccination strategy, which combines both imports of doses against COVID, but also building domestic production capacity. And based on that, the expectation from the authorities for this year is that they will be able to cover a large majority of the population, to vaccinate a large majority of the population by September. About 60% is the target. So, and in addition to that, when you look into that mid chart here, for a country like Kazakhstan, which has a relatively large economy and relatively large GDP per capita, the cost of vaccinating a majority of the population is relatively low. So these are good, encouraging signs. Just to caution, on the right-hand side, you see another chart that illustrates that, you know, like many other countries, Kazakhstan is not yet out of the woods. You see a strong peak in COVID infections. That's the black line, which happened last month in April. And things look better this month in May, but of course, this is still a difficult situation. Now, turning to economic policy response. As Subir said, the strength of the fiscal policy response is key for to support the economic activity in the short term. And what we have seen and what appears here on the left-hand side is the magnitude of the fiscal policy reaction in Kazakhstan, which has been pretty strong. We see that the deficit between 19 and 2020 is increasing a lot, from less than 1% to about 7% last year, 2020, percent of GDP. That's the public deficit. And this was mainly the reflection of lower revenues from the oil price shock, of course, but also, as you see in the small red bars on the right side, a lot of increase in public spending on healthcare, transfers to vulnerable households, and public investment projects to support employment. In addition to that, the bar in the middle sort of stacks up the various types of measure, and to this should be added what was also sort of extra budgetary actions to support activity and employment. So the overall package is pretty substantial in the case of Kazakhstan. And the key point again is that Kazakhstan had the luxury of having resources from its national fund to finance a lot of that spending increase. So, and that's reflected in the fact that their debt level, public debt level, is low and will remain relatively low even despite the shock. So that's an important consideration for Kazakhstan. If you look on the right-hand side, this illustrates more the monetary policy response to the COVID shock. So as you can see, initially around March, April last year, the oil price shock put a lot of pressure on the tenge, on the exchange rate. And initially, the authorities reacted by hiking interest rates, policy interest rates from the central bank. And also they intervene in the exchange market to avoid short-term volatility of the exchange rate. But as you can also see, very quickly they changed tack. And by this, I mean that they focused more on the domestic economy. They let the tenge depreciate and cut the interest rates. So they shift the focus to supporting economic activity in the country. And of course, this is reflected in the cut in interest rates, but it's also reflected in expanded subsidized lending programs, for example, by the central bank, for SMEs, for example. So all of these were important measures to support the economy and to support credit to the private sector in particular during the shock. Last point on this chart, you see that inflation has increased since the shock, because I mean it was around 5% in 2019 and it jumped around 7% currently. So that's an important consideration, of course, in the consideration. One thing that is not shown here is there was also a strong policy reaction in terms of supporting the banking system. Like many countries, there was a temporary relaxation of prudential standards in Kazakhstan, and obviously the objective of that was again to support credit, to support the activity, and to avoid too strong a recession. Now, if we look at the impact of these measures and this policy reaction, as you can see on the left hand side here, the growth trajectory is a recovery. We had a contraction of real GDP by about 2.6% in 2020, And this was largely reflecting the declining activity in key sectors, services, oil sector, of course. But we also expect a rebound in this year, which is underway actually, and we expect growth to stabilize around 3.5% in the medium term. And as you can see on the chart here, Kazakhstan, as Subir also mentioned at the end of his presentation, Kazakhstan, like many countries in the region, are expected to be more affected by the crisis than the average emerging market and developing economy, which is the blue line here on that left-hand chart side. So what about uncertainties? As highlighted by Subir, there are many, including first and foremost the evolution of the pandemic, which is we have encouraging signs, but it's still uncertain. Similarly, growth prospects in the main trading partners of Kazakhstan, as well as the capacity of banks to support the recovery. Banks have to have sound, resilient balance sheet and repair the balance sheet after the shock to provide credit. Now, that, like in all countries, again, there is some uncertainty in terms of that capacity. And finally, I would say that in the case of Kazakhstan, the volatility of oil prices and international food prices is an important factor. So you saw that the inflation was above the official target, which is 4 to 6%. It's now around 7, as we saw. So that's another concern and going forward. Now, there is also a need more broadly to strengthen the policy frameworks to preserve the buffers that the economy has, but also to strengthen the future policy space for in case of future shocks, of course. So quickly, I mean, in the fiscal area, that means that Kazakhstan needs to continue to consolidate its fiscal situation following the increase in the deficit last year and a little bit this year also. But it also means strengthening the framework, meaning strengthening fiscal rules, fiscal risk management, and transparency of fiscal policy. That's an area where there is a lot of room for progress. On the monetary policy side, I mentioned flexible exchange rate. I think the commitment of the authorities to inflation targeting and to flexible exchange rate is to be commended. It has helped the economy, as we saw, to absorb the shock last year. And they also have a strategy in the coming years to strengthen the whole monetary policy framework, to improve monetary transmission, to reduce dollarization, which is a big challenge in the region. And they are making progress in Kazakhstan in that area. And also to build institutional strength and credibility of the whole framework. And that goes to the mandate, the clarity of the mandate of the central bank, and to its independence. Finally, on the financial sector, the measures I mentioned to relax prudential requirements have also to be unwound, because we want to make sure that the financial system is capable of managing the risks, not just benefiting from subsidized lending or guarantees. So final slide is to maybe to step back a little bit more and look at the long-term challenges and opportunities for Kazakhstan. So what are the key reform priorities we see for Kazakhstan, and how can they reach higher growth going forward? On the left side, you see two charts that illustrate what we think is two key challenges. One is export and economic concentration. We talked about it already, but the economy is very concentrated in extractive sectors in general. And so there is a need for diversification, and for that structural reforms will be key to develop non-oil growth sectors and the private sector more generally. The bottom chart on the left is just an illustration of the large state footprint that Subir was mentioning. Here is just showing the role of the state in regulating the economy and so product markets, and compared to the OECD average. And you see that Kazakhstan is a highly regulated economy. And that, I mean, there are many other measures of this state footprint, of course, but the broader point is obviously that there is large scope for private sector development, for a more vibrant SME sector that will help diversify the economy. So increased competition, privatizations are expected to resume soon, and improve governance more generally. Strong independent institutions are also key to improve the role of the state and to create space for private sector development. I will not repeat what Subir said about the importance of unwinding the recent measures that have actually increased further the role of the state. That's very true in Kazakhstan, and that will be a priority in the short term. Another opportunity for Kazakhstan I would like to mention is the creation last year of a new financial regulatory agency, which will go a long way, and we are engaging with them very closely to align the regulatory and supervisory standards in Kazakhstan with the best international practice. And we see this as a sort of a core component of having the financial system managing risks and not just, providing credit based on public guarantees or other less market-based, if you want, signals. Finally, on the right-hand side, you see a little bit where Kazakhstan stands in terms of cross-country indicators of economic competitiveness. So here, I think the bottom line is that we can see that Kazakhstan is relatively well positioned relative to the average emerging and developing economy in some areas. And so that's a good sign for future growth. We talked about macro stability, but we can see here, for example, that in terms of ICT, so information and communication technology adoption, Kazakhstan is relatively well positioned, and that of course is important for private sector development again. Finally, I would just highlight that the authorities have also announced plans to address climate-related challenges in the country, and again, that's an opportunity to open prospects for new growth, new drivers of growth, and of job creation in Kazakhstan. Let me stop here and back to you, Svante. Thank you very much.
Thank you, Nicolas, and thank you to both of you. I would first like to encourage everybody to pose their questions in the Q&A format. I already have one, a specific question which we will get to. I thought first to start with any questions about the general situation in the region. And if I may start, listening to you and seeing your presentation, I recall the event similar to this one that we had, I should say it must have been about 5 years ago, in the aftermath of the 2015 collapse in oil prices, when we of course had problems with remittances. We had devaluations in many countries, serious devaluations of currency in both oil producers and oil importers. And I remember that at that event, Mr. Kekkonen, who was at that time usually the person presenting the IMF data, he made it very clear that this was not going to be a short recovery. This was going to be something that was going to take a substantial amount of time. And it seems to me that, at least in many of these countries, by the time the pandemic hit, they had not come out of the woods, if you will, of the economic downturn that had hit them back in around 2015. Now, so my question to you would be, how do you view this? Are you viewing this as something that further deepens the economic difficulties of the region and makes it harder for these countries to emerge from their hole, if you will? And if so, are we looking at a decade of lost economic development across much of this region from 2015 to 2025, if you want to put it dramatically? Who would like to start? Subir, perhaps?
Well, thank you, Svante. Maybe I'll take a stab at it, and of course, Nicola can will I think join in after that. That's a good question. I mean, the last serious crisis in the region was associated with the oil price collapse, and so the way I would look at it is, what were the lessons from that? And one of the key lessons was that when the economies are undiversified and highly relevant in one or two main sectors, then when a shock hits that sector, the recovery can be prolonged. And if you recall, the policy advice from the fund, even at that time, was that they need to accelerate reforms that help diversification of the economies, integration with the global supply chain, and integration with each other as well. Unfortunately, progress on that was not as quick and as fast as we would have like to see. On the other hand, some countries were able to build substantial buffers in the aftermath of that crisis. And of course, Kazakhstan was one of them, and that was helpful. So those countries that had buffers, and there were a few others as well, were able to ride out this one relatively better. But the underlying problem still remains, which is that many of the countries are undiversified, highly dependent on commodities, for example. And so the prospects, and in some cases tourism as well, which is also purely an external shock in the current crisis because the tourists are just not coming. Now, in terms of your precise question, how long will this last? Well, it really depends on how the pandemic unfolds, and I think maybe I will use this opportunity also to answer the very specific question on tourism and Georgia that was posed in the chat box, which is, it really depends on how quickly tourism can bounce back. We don't, the fact of the matter is we just don't know exactly how soon things will normalize, how soon as I had mentioned in my presentation, the vaccine rollout can be more or less complete and that the pandemic is firmly under control. In addition, there are the scarring effects. So what it means is that the underlying sort of urgency from the past has not gone away. If anything, this crisis has underscored 2 or 3 things. One is, if you can, you should definitely have buffers. You should not be in a situation where you have to make very difficult policy choices, as some countries have to do, unfortunately, because the fiscal and debt levels won't allow them to, do too much. But the other is also to diversify economies, to reduce, to improve resilience so that they bounce back from crises better. So it's the policy choices that will determine how long the impact of this crisis will be. If the policies move towards some of the medium-term issues, which are also illustrated in our report, then it'll be much faster to both regain GDP levels, but also move to a higher level of growth. However, if policy choices do not necessarily embrace this call for bold action, then it could be a long time before we are back to where we were, say, in 2019. But Nicola, perhaps you might like to add something to that.
Oh, thank you. I think the way you put it is great, Subir. I would perhaps just mention one way to see it is to think about 2 underlying trends. There is the long term and there is the cycle. I think on the cycle, countries in the region have done a lot of efforts and progress in terms of building the buffers, improving the policy frameworks, like we discussed in the case of Kazakhstan, for example. For example, exchange rate flexibility is a benefit to manage the cycle. I think here we do see progress in securing macro stability. I think the broader question about the longer term, the transition to more market-based economies, that's something that is, as Subir was saying, going to take more time, more reforms. You want to develop SMEs, you want to develop productivity, to have productivity gains, to create jobs, and that's not created by the state in the long term. So you have to have that transition, and that transition is really unfinished business in, I would say, in all countries in the region, to varying degrees, but in all countries.
Maybe I should, if I can add one point, to what Nicola said. Indeed, the improvement in the macroeconomic policy frameworks and the financial frameworks very likely helped reduce the short-term impact of the pandemic on these economies. So clearly that was a big benefit, even though the medium-term challenges still remain. And so, while the job is not finished, even on the macroeconomic policy frameworks, important progress was made, including financial supervision and exchange rate flexibility, monetary policy frameworks, buffers in cases where it was possible. And certainly, as Nicola said, yes, on the cyclical side, that helped. But, the medium-term challenges are still big and require very bold action.
Thank you. If I could continue on that line of thought, it seems to me that if we look particularly at the oil exporting countries, that's, if I'm not mistaken, where in the past 5 or 6 years, the main impetus for reform has been. It seems to me that after 2015, they really got, the message internalized the message that they can't go on like this. And that I think all of these countries, in Uzbekistan, obviously under new leadership, perhaps Turkmenistan is the exception, but definitely Uzbekistan, Kazakhstan, and Azerbaijan, the government all, it seems to me, launched very lofty, large-scale economic reforms. And also, to a certain extent, they understood that in order to achieve the economic results that they felt they needed now to also engage in political reforms. Just perhaps the assumptions that I'm making is that up until that point, they felt that, well, these difficult political reforms that really require attacking the oligarchies that exist in these economies, to really take on some of the vested interest, maybe wasn't really so necessary if you were able to live off these rents. But I think after 2015, we saw all over the region that there was a new willingness to really do something. Now, I guess where I'm trying to get to with this is that I think there is no question that in order to achieve economic diversification, there is serious political reforms that are required in all of these countries. Not only the oil exporting countries, but all of them. But this is a very hard thing to achieve. I mean, we've seen all these very nice looking plans for reforms. I mean, we've published a book about the reform agenda of the Uzbek leader. We've written about the ones in Kazakhstan and Uzbekistan. They all say the right things. The problem is turning this into reality there's a lot of challenges within their own governments, within their own systems, within their own vested interest in their economies. How do you have any sense of the political will to really engage in these difficult reforms if they've been, have they been scared away by the difficulties during the pandemic? As you mentioned, the role of the government has by necessity increased. Or do you feel that there is still this, or even more perhaps, of this determination that we really have to change the way we do things, if nothing else for our own sake? I hope that makes sense.
Yes, I mean, that's quite a complex set of issues, and I should say, well, we're certainly not experts on political economy, but I think it's safe to say that there is broad agreement in terms of the policy advice we are giving and the need for diversification to move away from one or two sectors, especially commodities. And I think that's generally widespread. So the question is not so much of what to do, but really how to do it. And, Santa, as you said, of course, these are difficult reforms. I don't think anybody's under any illusion, because if it was easy, it would have been done already and probably done a long time ago. You mentioned one thing, which was about rents. And in fact, that brings me to, I think, what is central to this. It is, by their nature, for instance, extractive resources, things like that, there can be a potential for rent-seeking activity or weak governance, and that's why we have emphasized, especially in our recent report on governance, that reforms in this area would lead to better outcomes. So let's maybe separate that from political reform, but focus on the economic institutions. What you essentially want to do is remove the opportunities for and the rewards from rent-seeking behavior. And that would help make better use of public resources and make provision of public government services more effective, and also help improve the confidence of investors and competitiveness. So these are all reforms that go in the direction of reducing rent seeking, improving the efficiency of the use of limited resources, which is, of course, the fundamental problem of economics. And there has been significant progress in a number of countries. For instance, if you think about Georgia, I think Kazakhstan as well, Kyrgyz Republic, they have all improved access to budget information. That is helpful, because then the citizens, foreign investors, everybody knows how the public sector is spending its money. Azerbaijan and Uzbekistan have stepped up procurement reforms, and that is critical to ensuring that government contracts are negotiated through an open and competitive process, because in many countries worldwide, that is where often corruption shows up. So this has been an important reform on governance. Armenia will require legal entities to public basic ownership information in many sectors. So that reduces corruption as well. So, it is, what I mean to say is also simplifying processes for businesses and individuals remains important. Digitization of the public sector, how people pay taxes. Competition reform is also important to make sure there's a level playing field. The SOEs and the public sector are not crowding out the private sector, and that decisions on investment are made on a commercial basis, which is more efficient than if they are made on the basis of non-commercial goals. But of course, I mean, the point is that, there's no magic solution. It's not that, one can wipe away all of this in one go. It really involves sustained effort along a number of dimensions. And the fund, we are trying to help countries in that process, and including with our other international financial institution partners, in making sure that these reforms, and these are what are needed, take place, improving transparency and accountability, streamlining rules, implementing them fairly, beefing up anti-corruption frameworks, using technologies such as tax payments, and to make sure that it's a fair process. And I think we believe that that's how the reforms that would take place would in fact help in the broader goal of diversification, rather than a simple solution that, if we just change a few people, that'll change everything. I don't think that's the experience that we've had with successful cases of reform. Back to you.
Perhaps, Nikolai, you would like to add something?
Perhaps just a quick point to complement what Subir said, and to amplify the idea that our angle is really to help countries in the region to build institutions. Institutional building in the core areas that we are looking into, particularly at the fund, but also other institutions. When we engage, and we are stepping up actually our engagement with the region to build strong, independent, capable institutions for monetary policy, central banks, financial regulation, of course, public government institutions. We are really engaging and stepping up our engagement in the region at that level. And that, of course, is not the high political economy dimension, but it's really the groundwork for, once the things evolve, there will be in the capacity to really change the situation. And one of the examples of our stepped up engagement is that we have just opened a regional TA, Technical Assistance Center in Almaty, which will serve the whole region. And again, we will have experts. We do have actually experts now in the region, in the core policy areas that we talked about, and they will engage in the field constantly. So we see this as our way to contribute, to the eventual benefits of the transition. And it's true for technical assistance, it's true for our policy dialogue, and it's true for our program engagement in the region. So we are really trying to step up that support.
Very good to know. Now, I don't want to monopolize the conversation. There are others. I don't see any questions, so I'm just going to keep going, but I encourage everybody to be part of this conversation. A point that was raised by one of you, I think it was Subir, just in passing, was the issue of regional cooperation, that they need to work with each other. Now, prior to this most recent crisis, we had seen a growth in definitely, at least on the highest political level, in the meetings that were held between the presidents of Central Asia. 2 meetings were held, where there's a third one in planning. We had to some extent seen, although from low numbers, a growth in trade between at least some of the countries in Central Asia. Particularly, I guess, the biggest changes were between Uzbekistan and its neighbors. Now, I guess this leads me to 2 questions. First, well, we have seen how there has been some remarkable elements of Central Asian countries showing solidarity with each other and assisting each other during this crisis. But have you seen whether the trade within the region has been affected? And then there may be a question that I would like to add to that, which might be too political for you, but I'll throw it out there anyway. we don't have at this Central Asia, and this is of course, if anybody in the audience has followed our events and our publications, you'll know what's coming, which is that the Central Asia is the only world region that is not institutionalized, since you were talking about institutions. Obviously, your primary focus is on national institutions, but do you feel that the existence of some type of institution on a regional level that promotes economic cooperation would be beneficial for this region if you compare to how you engage or don't engage with such institutions in other parts of the world?
Good questions again. So the logic of regional cooperation, why is that important? Many of the countries in the region, as you know, are landlocked, so not have immediate direct access to ports. So that's, but given they're relatively close to each other, and this region as a whole, if you think about it, is close to several fast-growing regions, East Asia, South Asia as well, and also dynamic parts in Europe and in the Middle East as well. So from a geographic point of view, and analysis like gravity models, for example, show that there's a lot of unexploited potential from integration in global value chains for the region. And so it makes economic sense to try to be more integrated in the region. And also the nature of investment and trade is changing. A lot of it is now moving towards intangible investments, not just tangible bricks and mortar type investment, but other kinds of investment. So that makes being landlocked less of a disadvantage, so to speak. And of course, the education systems in these countries in many cases are quite good and well established from a long time ago. Highly skilled people, highly skilled students and youth are present. So there is, one can make a really good case of why regional cooperation would help use this unexploited resource to improve living standards. Nicola mentioned at the beginning that these countries are still in transition, and one could say that there is still ways to go, which means, of course, the upside from completing the transition is quite high, and trade is an obvious and in fact well-established way of being able to do that, and that's what countries for instance, in Eastern Europe have been able to do for the most part. So cooperation is important now and can help, and we've seen positive steps towards that. We continue to see that. On to your question on what happened with trade, of course, the pandemic was quite damaging to trade because borders had to be closed and so on. But when we are hopeful that as things normalize, they will come back to where they were before, and in fact even pick up beyond that. And so this comes to the issue of, so what is the role of the public sector here? I mean, we're not saying there's no role for the public sector, but there are some things that the private sector just cannot do. And that includes investment in infrastructure, for example, in addition to investment in education and skills. And so there, I think, connectivity, for example, that will be important for regional integration. And there are forums, in fact, for regional cooperation. So just on your second point, for instance, CACI is an institution that we do work with very closely, including with our partners at the Asian Development Bank and others. And we are, a regular presence at the CACI meetings, which helps foster cooperation. And we ourselves also try to make sure that countries in what we call Caucasus and Central Asia have the opportunity to come together during our own convened meetings, including in the spring and annual meetings, to discuss issues of common interest. And things like regional integration feature very prominently in that. Nicola, would you like to perhaps add anything to that?
Maybe quickly, a couple of points. One, we do want to look into that potential gains from trade in the region and integration. One consideration here is that whether the region should see itself as a corridor, between, for example, some of its big partners, corridor between China and the rest of the world, or other channels, versus developing value added locally. And I think that's one of the things we need to look into. And where is that capacity to not just be a corridor, but to have integrated the product, producing systems to create a value added more locally. Of course, we see areas of strong potential for that. For example, as you know, agriculture in Kazakhstan has huge potential, including for regionally, but we are far from exploiting that potential for the reasons that Subir mentioned and the role of the state. And that goes to close on this. That goes to our point about the role of the state in terms of, COVID should not lead in our view, countries to backtrack on reforms on the role of the state. We don't want to turn back to import substitution or some policies that basically would be countering that potential at the regional and cross-country level. So that's something we look into. We have good signs that there is not such a backtracking in several of the countries, but that's something that will be important for sure.
Oh, I'm sorry. I would like to note on that point that the Institute published a paper only several months ago by two of our former fellows and alumni of the Rumsfeld program called Discovering Opportunities in the Pandemic, 4 Economic Response Scenarios for Central Asia. Anybody who's interested can access it through our website, most easily at silkroadstudies.org. I will now take a question from the audience, which is quite hitting very well, because just before we started our program, my colleague Dr. Tsereteli said that, well, he can talk about Latin America. So here we have a question that is there any interest on the part of Central Asian countries in strengthening the economic relationship with Latin America? Is this something that you are aware of, or is this not something that these countries have gotten to that point yet, so to speak? Nicola, you seem, oh, please go ahead.
No, sorry, I must confess that I specifically am not aware of any on a large scale, move towards that. But that does not mean that, there's not an opportunity there, because again, as I was mentioning, a lot of cooperation and value chains is moving to the space of also intangibles, where distances and borders don't necessarily matter as much. So there is, again, an unexploited opportunity for mutual benefit. And if you think about what is it about Latin America that might be appealing, many of these countries are at similar income levels and similar levels of development as countries in the Caucasus and Central Asia. So there may be complementarities that they can exploit together. And so that is, that's certainly something, but I must say I have not thought or been aware of discussions at a very specific level on that. Perhaps Nicola has some perspective on that, but it's a tough one.
Yeah, it's a tough one. I'm afraid I don't have much to add to your responses.
I will just mention that our institute many years ago, I think this must have been over a decade ago, we took part in a rare conference. It may not have been the first of its kind, but something close to that, about Central Asia in Mexico City with some of our fellows, former fellows from that region. We have to see if they have developed further interest, but I know that there is interest in Latin America for the region. Obviously, we've seen that Turkey, which a decade or two ago did not really have a lot, has very much increased its relationship with Latin American countries. Obviously, we have countries in the region such as Iran that are doing it, perhaps not for the right reasons. So I think it's probably just a matter of time before there is a growing interaction between Central Asia and Latin America as well. We've seen the opening up of embassies that the Central Asian and Caucasus countries have expanded their diplomatic footprint all over the world. We have to remember their foreign affairs ministries and bureaucracies are relatively limited. I guess on average, they probably has somewhere from, I would say, 60 to 80 embassies abroad. and it will take some time before the full diplomatic network reaches to places like Latin America. I would, just a moment, let me see if, yes, I have a few questions here. One is from our colleague Mamuka Tsereteli at our institute, who asked if you could elaborate about the prospects of exchange rate stability in the region.
Well, we do not make comments on the future direction of exchange rates or any of the asset prices for that matter. But maybe I will use this opportunity on this question from Mamuka to talk about why it is desirable to have exchange rate flexibility, as the crisis has shown. Because, of course, many of the countries in the region have, there's a legacy, there's a high levels of dollarization, including at the household level and certainly also at the firm level. And so citizens, maybe households, firms, derive a lot of sort of comfort from having a very stable exchange rate. But so the problem is, in a way, needs to be looked at, and one can see why, because if you hold if you have a lot of borrowing in dollars or deposits in dollars, you care about the exchange rate then, and you don't want it to move. And the problem, of course, is that when the prices don't move, when there's a shock, quantities need to move, which means that because something has to adjust. And then what that means is that incomes and GDP can be subject to greater volatility if you don't allow exchange rates to act as a shock absorber. We saw in the crisis last year, a number of countries allowed the exchange rate to move quite a bit, and that helped cushion the shock. Kazakhstan was one of them, of course, the Kyrgyz Republic, Georgia, I can name quite a few, Tajikistan also, I believe. Perhaps. So what that does is, but the things have to go hand in hand, that the sensitivity to exchange rates needs to be reduced, and at the same time, the exchange rates need to be more flexible. And so in that sense, the question for what are the prospects for, coming back to Mamuka's question, perhaps, what are the prospects for flexibility? I think that once, progress is made on stable macro frameworks, that's usually what, on focus on inflation, for example, focus on well-contained fiscal deficits, that increases confidence in holding the local domestic currency. And then what that does is that automatically reduces dollarization and hence allows exchange rate flexibility to do its job better. So it comes as a package. A good macroeconomic policy framework is both a cause and an effect from exchange rate flexibility. And it is important going forward because, as I said, if exchange rates don't move, and one can see why people might resist that, it actually shows up in other ways which are also very damaging for the well-being of households and of firms. So that would be my quick response to that question.
Thank you. We have another question from my friend Damjan Kunjevich-Miskovic, who mentions that the most significant recent geopolitical development, at least in his opinion, I would tend to agree with him, is the Second Karabakh War that was held last year, or that took place last year. And more relevant to our discussion is one of the provisions in the ceasefire document that ended the war, which stipulates the construction of new transport links, specifically, of course, to connect Azerbaijan's Nakhchivan exclave to the rest of Azerbaijan across Armenia. But also, I think there is a more broader, and here I'm departing a bit from Damjan's question. There was a stipulation that all trade barriers between these countries that have effectively been, locked away from one another for 30 years are going to be opened. And I'm assuming that this would include also the border between Turkey and Armenia. His question is whether you've observed any concrete interest or preparations anywhere in the region for taking advantage of this new direct trading corridor to Turkey, Is this something you think may have an impact if these trade, more broadly, if these obstacles to trade, very physical obstacles to trade, are being lifted? I mean, you could speak directly to what it would happen, what it would mean for Armenia, if you would like.
I'm afraid I don't have that level of detailed knowledge on specific countries. Although, as an anecdote, I can say I do know a little bit about Georgia, and which is that certainly there is a big public investment program ahead for connectivity of roads that is still ongoing this year and into next year. And that's an important element of public investment there, which is ongoing. So connectivity there is seen as important. I think the broader economic issue indeed, though, is that, and I think it links back a little bit, if I'm not stretching it too much, to the comment I made earlier about public investment and regional integration, which is that there is certainly building of infrastructure, including connectivity and roads, is an important element of what the public sector can do, which the private sector will find it difficult to do, and that can help integration with global value chains. And so, without getting into the specific context of individual countries, certainly to the extent that there is greater integration, this would be helped by that. But I would want to, again, come back to the point that I think we need to also step out of sort of a very, conventional way of thinking about when we think about trade as all about, the physical movement of goods across roads and ships and planes. There is a lot more exciting opportunities of creating value added, which are, as I said, in the intangible sphere. And so there has to be what that puts a premium on is on different things, such as on education and skills, and of course a cooperation there can, and of course I think Svante, given where you come from, you have seen that in action. I mean, the Scandinavian countries have in many cases seen a huge change, and the Baltic countries as well, from developments in that area. So I think there is an example to be had, and the countries there have also certainly benefited because they have the education systems in place to be able to take advantage of that. And that's certainly an example from your part of the world that I think could translate quite well into what we might see in the future. I'm not to say that roads and bridges and ships are not important, but I think it's only part of the story and not the whole story.
I think your point is well taken, that we have to look beyond this. It's not, and even if you're talking about the physical trade, there's a lot of emphasis on, and Professor Starr always makes this point, that there's a lot of emphasis on roads and tunnels, but less on who's going to do the insurance, who's going to do the warehousing and the logistical operations, and outsiders might come in and do it when there is a possibility for countries in this region to do it themselves. Now, I would like to ask a question about Kazakhstan more specifically, if I may, which is to note that I think one figure that stood out from your presentation and the part on Kazakhstan was regarding external debt, where there was a tendency whereby, the oil producing countries tend to have low debt, oil exporting countries and the oil importing countries tend to have higher levels of debt, but Kazakhstan stands out there with a level of debt that, according to your figures, is close to 100% of GDP. Do you feel that this is a problem that the Kazakh government is addressing, or is this merely a reflection of their very serious investment in ways to address the crisis that they've been through, and that therefore this is something quite normal?
Okay, I need to check that number. As I said in my presentation, the level of public external debt is low. It depends if you talk about public sector or more generally, of course. In terms of the public sector, if you take the public sector external debt and you compare it to the assets accumulated, for example, in the National Oil Fund, you see that net Kazakhstan is a creditor to the world. Actually, it has a net, it has net negative debt, if you want. In terms of the broader picture for external debt, I would like to look into this what you said. again, I think this is not going to be a constraint for Kazakhstan. This 100% number strikes me a little bit.
I may have misread it.
Yeah, I may need to double check, but if it's what it is, but I mean, bottom line is that public external debt is not a concern because of what I said in terms of the accumulated savings in foreign assets. So the oil.
Very good.
Yeah.
There was also a question regarding if there is time to discuss more the economic prospects of Georgia from Maya K. If you could, if any of you, I see that Subir is already reaching for his microphone. So Subir, please.
No, I was just, I actually just replied on screen, and that's what I was typing here, which is that we published a staff report on Georgia on April 16th, and that is our most updated assessment on the prospects for the Georgian economy. Just maybe a quick mention might be that, of course, Georgia went through repeated waves of the pandemic and seems to be having a bit of a pickup in recent weeks and is facing a third wave of COVID-19 after the second lockdown, which ended a couple of months ago. And so it's been a challenging situation, especially given the reliance on tourism. And in fact, one of the questions, coming back to the earlier question on tourism and why do we see it as taking so long? Of course, I mean, it depends on a number of factors. Where did the tourists come from? How is the pandemic evolving? What is the type of tourism? Is it very contact intensive? Or in some cases, it doesn't have to be. So those all factors went into shaping our outlook for the economy. But we think that, as in the region as a whole, I think the main factor that will shape the outlook for Georgia right now is really the vaccinations and getting past this, emerging this wave of the pandemic. And so, again, to re-emphasize for all the countries, we are in such an unusual time, in such a big sort of a shock that we haven't seen in a very long time, that we all should be prepared to think about our forecasts as, sort of what we call the mode, most likely, but with a huge uncertainty around it. So when we talk again in 6 months, we'll have a bit more information as we have now compared to 6 months ago. It's really a hard time for forecasting. Nicola? Yeah.
Sorry, Svante, I wanted to come back to your earlier questions because I see what you said. I checked the number. Yes, the level of debt, external debt total, including private sector, is close to 100%. The main driver of this is intra-company debt, and that's a reflection of the huge presence, as you know, of foreign oil companies in Kazakhstan. If you remove that component, you go down to a level which is around 30%. So it's closer to what I was saying.
Thank you very much. That's I think that's very important. Now, I think we're at this institute, as much as we enjoy our webinars and hopefully again seminars at some point in the future. Who knows? Maybe next time we welcome you. We will be able to do it as a physical or hybrid event. We will definitely find ways to keep our non-Washington-based audience with us. But we also put a premium on ending in time because we know people have other fish to fry, so to speak. And therefore, as for now, I'd like to thank you for this presentation. And again, to reiterate that for our institute, we do a lot of publications and events on issues that tend towards, globe spinning, as Professor Starr would put it, the geopolitics and the like. But the fundamental issue for the people who live in this region is their economic livelihood, which has been a very, not at all a linear issue, if you will, in the last several years. It's been a very a roller coaster, and it was before the pandemic, and it continues to be. I guess we can take some comfort in the fact that you are forecasting a return to growth, at least in these countries. Hopefully, I think what I take away from your discussion is that there are opportunities to, as we put in our title, to grow back better. That the urgency that many regional governments have felt for the diversification of their economies, for the political reforms that are necessary for this diversification. We also hope that the like you yourself, that other international organizations and Western governments are part of this and help sharing their experiences and support the efforts to diversify and to reform, because as those of us who have been involved in any type of real serious political reforms know, this is not something easy to do. This is something that we're still talking about remaking the very mentality of what government service means in many of these countries. And that's taking a long time, but it's more needed now than ever. We will be back very soon to our attendees with future events. Usually we have one lined up. We don't exactly have a date right now, so I will leave that open. But we will be back, and we definitely look forward to, in 6 months, to having your next analysis and next forecast. And we will probably we will know more then. For now, I'd like to thank you both, Subir and Nicola, for sharing your wisdom with us, and look forward to seeing you soon. And thank you to the audience and to everybody who asked questions, even all the way from Chile. Thank you very much. We will see you at the next event.
Thank you, Svante. Thank you for hosting us, and we look forward to meeting again next time. And thanks also to the audience for the very good questions.
Thank you very much.
Bye-bye.
Thank you.